But we must talk about Trent. Pull it up. It's arguably the casualty of the day, as Neeraj was pointing out at the start of the program. This was anticipated based on the latest updates. And Parag bhai, I'm sure that you've looked at the latest updates. Are you surprised by the kind of reaction? And of course, it could settle early minutes.
Sure.
But what do you make of it?
See, I'll tell you. So I was very bullish on Trent. It was one of my top holding when it was closer to 1300 and when this Zudio story started to play out. But now, the stock is available at more than 100 PE.
Yeah.
Last year, if you see, the PAT is around 1600 crores. The current market cap is 2,20,000 crores. So it's too high. EBITDA was around 2,600 crores. So I think when you stretch the multiples so much, the expectation of growth is also very high. So with this kind of PE multiples, I would easily expect about 30% growth, right? And when they are saying it is 22, they are guiding for 25 to 30% long-term growth, but this quarter was 20%. Of course, this quarter was seasonally slow quarter. But I think when expectations are set so high, it's not a fault of company, it's a fault of investors who have been buying this momentum. And so I think they will go for this kind of a time consolidation or a correction.
Is Trent a buy on a dip at all?
So at a price, it's a great business, great management. So at a price, but we'll have to evaluate, based on how even for that matter, the entire market, right? Entire market is right now priced in for perfection. So if there is no recovery in the second half, then some of the companies or overall markets might also disappoint. We have to look for earning growth now, because this quarter is very subdued.
Kush, Trent on charts?
I'd wait a little. It had negative RSI divergences setting up anyway for the past 5 to 10 sessions. Now it's opening at the 50-day moving average support, which it might test and perhaps even breach. So I'll wait and watch. If it does hold up above this 5550 5600 zone, then maybe, but not right at the open.
This is interesting because retail is not having a particularly great month, right? The 5 updates that have come out thus far, Avenue wasn't the best, Trent isn't the best. One of the Vishal or the V2 retails wasn't quite up there too.
V2 was good.
Yeah, but Vishal maybe wasn't as good. So I think retail is having a slightly iffy time. By the way, we found the reason for Concor being down. It's an ex-bonus date, so viewers don't be confused with
alarmed,
this.
Yeah.
Alarmed with this.
It's a 1:4 and today is the record date. So which is why you're seeing Concor.
By the way, there are several stocks I just want to point out very quickly. Axis Bank, Bharat Forge, pretty large banks. Mahindra and Mahindra as well, all trading ex-dividend. You have Nippon Life, Escorts Kubota, DCB Bank. These are all stocks that are trading ex-dividend.
Now, the other thing is, we've spoken about Jane Street so much, but there's a market implication, a stock implication to this, right? So if the custodian revenues are to go down, will Nuvama get impacted? The stock is down 3%. High frequency brokerages, will they get impacted? Angel One is down about 2.5%. Will BSE, where some of these are housed, will get impacted? BSE is down about 1.5% as well. So there is some stock impact being seen here. Would you reckon, Parag bhai, in your wisdom, that there could be some bit of hands off, or do you think this capital market story is strong enough for the dips to be bought into?
See, as I told earlier also, we have discussed this capital market stocks earlier. I told that I bought only one stock, 361 Wealth, during the February fall. Generally, what I feel is when market is little bit more, I would say, momentum based or euphoric, you should not buy capital market related stocks. Because they will also fall in line with the market if the market corrects, right? If the market consolidates or corrects, and the volumes will also dry down. So this is, of course, this is one of the reason of Jane Street. For today, that might be the reason. But over a medium to long run, I think, of course, the many pundits of market remain very, very bullish on this particular capital market theme. But I would not buy at these prices, for sure.